New Year and
Alright, so welcome to the India market review for 27th December, the last IMR for the year 2014. We'll get into the new year in a few days. So before I go ahead, here's wishing everyone on the session and who watches the recording a very happy new year. I really hope that there'll be a lot of new things happening for you. I know there are new things happening for some of us, and it's really a prosperous and a great year, one that you've never had before, and it has lots of happy moments and things that, I don't know, I like to use the word transformative nowadays, changes in your life, health-wise, wealth-wise, profession and family, everything, right? Okay. And I hope that you will keep hearing some news, good ones, now and then from the BIC side as the year moves on. Okay, so with that, let's jump into our last IMR of the year. We'll start with the Nifty, of course, as usual. And as you can see, the expiry Thursday, or rather Wednesday this time, since Thursday was a holiday, Christmas. After that, so we closed, expiry happened on Wednesday on the 24th, and it was I think for some of us an unexpected down move suddenly in the last 1 hour of trade, having the Nifty close at a pretty important or close to a good important support level of the last 4 or 5 months, which is at around 8,150. And on Friday after that, pretty lackluster trading, not really much happened, and this is where we closed at 8,200.7. Very low volume, pretty expected actually. People taking off, 4-day weekend, probably take Friday off and you have 4 days, and then the New Year's next year. So one would expect that volumes will probably come back to normal only, I think, after 3rd or 4th or maybe even the 5th of Jan. So where we are on the Nifty is we have now a tentative downtrend with a lower top, and it becomes a confirmed downtrend if the lower bottom happens at around below 8,000 or 7,900 on the Nifty. So we are very critically poised at that 8,150 support and a downtrend line. It's a sort of consolidate squeeze that's going on. Plus you have the 50-day moving average on top, this, and the 100-day moving average on the lower side. So it'll be interesting to see which way the market pans out. But clearly for now, there seems to be a downtrend happening, and if nothing else, one has to at least take the view that the uptrend which was there from almost the beginning of this year is now over, even in the most optimistic scenario. So while we can't say we have an established downtrend or a confirmed downtrend, we can say that we have a downtrend which no longer exists and has tentatively been broken and is most likely to actually now go down. So if you actually look at that uptrend line which I just drew, that is now acting as a resistance. So we have a tentative downtrend and an uptrend line which is acting as a resistance. We have a very important support, and if this, so we really have to see how this pans out. As you can see, 8,300, multiple resistances there, both the prior uptrend and the downtrend, and 8,150 on the lower side, an important support, and then at around exactly at 8,055 we have the 100-day moving average. So it will be very important to see what happens in the next 2-3 days. I guess this will get resolved in the sometime next week. I will be very surprised if we become a doji for the next 3-4 days. So exactly where the mouse is today right now will be the Monday session, and then Tuesday, Wednesday is sort of the max we have to make a call on which line, which support or resistance gets broken, right? So interesting times ahead. It will definitely be interesting to watch how the market decides to open the new year, let's say. So given this, it's a sort of very iffy market, right? Uptrend over, downtrend query confirmed, right? So that's what it is looking like. So that's on the Nifty. So essentially anything above 8,400 only, if the Nifty goes, then one should be looking at going longs, and if it breaks, especially breaks 8,000, 8,050, then one should definitely look at shorts all the way, at least I think till 7,950, and then perhaps all the way down to 7,750. If you look at the indicators, then the MACD clearly on the negative side. The RSI, which was earlier 54, was a sort of support, is acting now as a resistance, plus the short-term stochastic has turned down. Now, the whole thing about this iffiness is more exacerbated because of the low volume. We really don't know how, when the money comes back, which way it will move. So that's on the Nifty. Coming to the Bank Nifty, getting into the sectors. So Bank Nifty, again, we've kept saying this for the last several weeks and a few months now, that banks should be bought, and that has not changed. Again, the Bank Nifty at a doji, once it crosses 19,000, then that's when the buy would happen. So for now, it would be wait and watch, on my opinion, on the Bank Nifty also. So MACD is still healthy on the Bank Nifty on the positive side. Of course, it could trend down all the way to zero, but as of now, I think it's just a question of wait and watch. There's a big drop in RSI, as you can see here. Let me just put that, and so I'm not saying that's a negative divergence, I'm just saying that's a big drop in RSI. If you really look at this, there is, strictly speaking, no divergence because you don't have a higher top here, and going in a sideways fashion with the drop in between, that's where the RSI corresponds. So there's no divergence as such, just pointing out that there is some weakness in that up sentiment which was earlier there. So the bank's looking overall uptrend still very much there. Definitely no downtrend, there's no lower top as such. So banks still looking healthy on the long side. VSC power, so this is one place where the power index still looking weak. Really no sign of strength at all, and maybe this is the one place to look for potential shorts as we go ahead. Realty index, very interesting, taking support. On a line which is there for the last 4 or 5 years, and it'll be interesting to see where it goes from here. Important to note that almost all the moving averages are above the price right now, including the long-term ones, the 200-day, 150-day. So in terms of being on the right side of probability, one should really wait for this to break 1700. Until then, really not get into reality. Could be a place for shorting. On the other hand, this could also turn out to be a good basing price, base zone at which reality sort of settles down and then goes up. So again, on power and reality, as I talk, let me just highlight the RBI policy is, I think, sometime in Feb. This is one thing to keep in mind, and actually more than that, this is number two. Number one is quarterly results starting soon, or rather in a few days, which will probably set the mood for what will happen. So the quarterly results could be, of course, will be opportunities for event trading, right? So if you get a calendar up, etc., event calendar, etc. Okay. Then looking at the IT index, that also clearly has a downtrend in place. So that's where it is. More or less, same picture as what we have on the Nifty. So the IT looking weak, good support at 10,500, but we'll have to wait and watch for that. Mid caps, right? So this is the mid cap index. Usually we don't look at it too much, but that's pretty looking quite strong, as you can see. If you pay attention to the moving averages and how they have panned out, if you look at not really a downtrend in terms of such a lower top yet, though there is a tentative downtrend. Let it go down below 12,000, then yes. But it looks like where the action on the long side is still in the small cap stock. Same picture, similar or a similar picture in the Nifty Junior. So strength in the mid caps and weakness in the large caps looks like at this point. And again, you can see in the Nifty Junior has not really gone below zero, while the Nifty is clearly well below zero. Energy, CNX Energy, just a doji, and of course been on a downtrend for quite a long time. So there was this news about on the energy thing, just to add, crude oil customs duty up from 2.5 to 7.5%. So the government looks, and this is the second or third time I think they have increased customs duty. Pretty steep increase, 3x increase in tax on the customs side. Looks like the government is going into that scaled tax structure for crude oil, and if and when the crude oil international prices go back up, they will probably scale back on the customs duty down, or they might even increase it. Who knows if crude oil falls much more. So that will be interesting to watch. And then there is infra. Okay, reality, infra, more or less the same thing, but the CNX one definitely looking weak. Note that the CNX infra index does not start at 2008; it starts in 2010 after the big fall already. Then pharma. So CNX pharma. Clearly, this one has given way to what we were talking about. So we had the very tentative downtrend here, and then that downtrend, as you can clearly see, has become sharper. Okay, so pharma definitely no longer the place to. It's not a defensive one anymore. Also, it was leading the market for almost, I think, 2 years along with FMCG, but no longer the case. You can clearly see the downtrend getting sharper. And again, MACD or RSI or any way we look at it, there's really no strength at all in this whole setup. Okay. CNX PSU banks, just the public sector banks. As you can see, in terms of long term, still definitely the strength there. Some amount of hesitation here, so we'll have to wait for that to get broken out, and that will be around 4,350, and then we can see how that goes. All right. Now you can see on Friday where the rest of the market had made a doji, this one has actually given us a small Marubozu type candle. Mr. Comment, Sid added that while I put in this customs duty thing, Siddharth mentions that take the money in while they can. That's the government. Yes, absolutely. And we have gotten used to high fuel prices. Yep, we have gotten used to high fuel prices. Actually, we keep saying high, but for many years and even till middle of last year, if you compare our fuel prices to much of the rest of the world, it's actually not that high as we feel it is. Of course, it has been going up, and now it's almost down petrol by 10 or 12 rupees compared to the peak price. So we're obviously feeling happy. But yes, it is right. We got used to paying high. So the government is saying, why let the opportunity go? And in one way, yes, I would do exactly what the government does. As a consumer, I'm not happy that the duty has increased from 2.5% to 7.5%. But from the government's perspective, yes, take care of the deficits, raise the money, all game for it. And as a market participant, as an investor, trader, yes, I would definitely like to see the country's finances in a much better shape. Gives us a much stronger base on which to, go up, and less opportunity for speculative shorts in the future because of a weakening currency or economy or whatever. So the currency, of course, has become less than 63 to the dollar, but if the country's finances don't improve, then it will become 65, 70 and all of that. So good move by the government, all for it. So coming back to the banks, yes, looks like there's some more strength in the banks than the overall bank uh, PSU plus private put together. Looking at the auto index, so again MACD trending down, gone below zero, and could say that this is also seems to have become weak a bit, right? So at a very crucial point at the 50-day moving average, and over the last 3-4 days, all red candles, small ranges. But again, this could just be end of year stuff, less activity in the market. But clearly a tentative downtrend is there, and just noticed we had put this line, so let's extend this because this might just be something that we need to watch out for in the future. So 17,000 on the BSE auto, it will be interesting to see what happens. Tentatively just sticking my neck out for all, who knows, left shoulder, big head, and then another right shoulder towards maybe May, June, July, and then who knows, a crack later in the year. I don't know. Just got the thought, so put it out. Consumer durables, so these are also now sort of giving up. As you can see, clearly looks like distribution for those of us who know Dow theory. Goes up several months, not able to move, seems to have more weakness now than strength. The moving averages, the 50-day moving average moved down over, has crossed the peak and started to cool off. The 100-day will do that next if any more further down moves happen. So absolutely no strength in this. And again, if you look at the RSI indicator, overall ranging down, and the MACD also trending down. Actually, let me put a trend line on that MACD thing. We'll leave it there and see how that pans out in the future, right? Okay. Capital goods next. So those have also now sort of wouldn't say given up, but going down with the overall sentiment. GDP has really not improved. So really no strength at all. And if it takes 14,500, breaks the 200-day moving average here, 14,000 here, then clearly much lower levels could happen, maybe even till 12,000. But for now, really not much hope. FMCG, so that's also topped out for now. And well, interesting that we had a much bigger red candle, FMCG, on Friday. All the other indices, if you noticed, had dojis, but this one clearly has a bigger red candle, and that uptrend line is clearly under threat. And if that breaks down in the next few sessions, then who knows, maybe even 7,000 or 6,870 or something on the FMCG side. Healthcare, pharma, healthcare, almost an overlap, and again the same picture we saw on the CNX side, we are seeing on the BSE side. So that's the downtrend. Metals, alright, so metals broke down, went up, hit the resistance, and then have come back down again. So many excellent examples of technical analysis in action. Identify your levels well, and then you could actually end up making quite a lot of money. Okay. So yeah, so this is where the metal index is clearly under threat. Of course, there's a green candle for Friday, but I wouldn't read too much into this, and we'll have to see how. So talking about metals, I'm reminded that a lot of this happened because, at least if you want to find reasons, the cool off that was happening in the Chinese economy. But I think this week or this week, the Chinese government announced some new incentives to revive the economy. I'm not exactly sure exactly what those are, but it'll be interesting to see. The Shanghai went up, I think, 3.5% on Friday. But apart from that, the rest of the global markets more or less flat or slightly in the red. But again, is it end of year stuff or is it the sign of things to come? Too early to say. We'll have to wait and watch. Yep, so that's it. So I would say that after the let me put this as point number 3. After the sector review, the last man standing is the bank Nifty and PSU banks. All other stocks, all other indices, all other sectors are in a downtrend and or uptrend is clearly threatened. So I think given this, the view would be no new longs except maybe banks. Tighten exits, that is stop losses for existing long positions. Okay, shorts possible, so we'll look for what we could see, but the most important thing, low volumes, end of year inactivity, and best to wait for next few days at least. All right. So with that overall review, we'll quickly jump into the individual stocks. Not looking at doing anything in detail this time. If we find anything really good, we will have a look at it. Otherwise, we'll just keep moving on. Okay. So ACC, if you actually look at it again from a June to December perspective, you will see that again, 1550, etc. And if we take, let's say, the weekly chart, you can very clearly see something. And what can you see on the weekly chart? I think all of us will agree that there's a pretty good weekly head and shoulder top which is there, and that's pretty ominous. Ominous because we are seeing this. I think definitely Balki and Sid got it right. It's obvious. We've got a weekly head and shoulder top, and ominous because it's of what, 1, 2, 3, 4, 5, 6, 7 months duration, and the measuring implication is clearly almost 200 rupees. And if it comes down, then we're talking about 1170. 1170 very conveniently takes us to this zone at 1200, with a 200-day moving average plus the important long-term support. So very much could happen. Watch out for finding out when the results are, and if this breaks down, then we have a 200 rupee short, which is almost more, which is, by the way, almost 15% of the current price. So longs on the spot should be liquidated and short position should be looked upon. Don't expect the thing to break down immediately or go down. Remember, this is a weekly chart. But again, when markets decide to go down, you have to observe, for example, here it took 3 full weeks, 3 weekly black candles, or actually if you take the lows of this, like 2 full weeks, just to be on the safe side, 3 full weeks, even here 3 weeks, here 2 full weeks, and then here of course just standing that side to go down by 200 rupees. So just if you were to take that, then if this breaks down, then who knows, maybe mid-Jan or something, we could be easily at 1200. So looks like we found a first big and good probability short. Writing calls or buying puts could definitely be the thing to do. if you're looking at limited exposure. Also looking at the daily charts, you can see for the last 2 weeks massive upper shadows, clearly selling happening at higher levels. 200-day moving average clearly acting as resistance now. 1420, 1430 is excellent stop loss for short, and 1320 first level, and then 1200 next is definitely something to look at on the ACC chart, right? So I would think that Ambuja could probably have something similar. Let's immediately just go to weekly. Not there, definitely no head and shoulder, but there is a clear double top around 230, 240, and there's a neck at around 205. Would probably just want to maybe not aggressively short this as much as ACC. But on the other hand, if Ambuja went up to 235, then that's the price you could look at, perhaps shorting it. Again, weekly chart, you can see long upper shadows, and I'm sure on the daily we're going to see more. Yep, and that too, red candle. So let's say it goes below 225, clearly a short, nice stop loss around 228, 232. I would say first target is around 220, and after that only 210, right? We look at Ultratech usually along with the cement pack. So there was some announcement, I think, some takeover or something, I'm not sure. Remember they were buying out the Lafarge Holcim stuff. So it's gapped up, and then we've got a dark cloud cover. There was okay, big volume, so something happening there. Oh yeah, Ultratech bought the Jayaprakash Associates cement factory, but I'm not sure whether this volume is on account of that or whether it is something else. Thanks, Balki, for that input. So there's a gap clearly. It'll be interesting to watch. However, till it breaks below 2450, would probably try and avoid Ultratech. So I don't know if that Lafarge thing has been fully, taken care of. I'm not sure whether that volume is about Jayaprakash, right? So shorting ACC, iffy a little bit on Ambuja, and Ultratech is don't short for now, but if it goes below 2500 for sure, yes. So coming back to our regular list, Asian Paints, so clearly now moving down. Can't say anything about the volumes, can't say it's a high volume thing, but clearly till comes to 700, maybe just stay away, or rather when it comes to 700 review might be a buying opportunity, but like I said, no buying in the current market. A lot of weakness across the board, and yeah, I think the really good support is only at 276, and only after that okay. Asian Paints, so 676, we'll have to see whether that holds. If it doesn't, so you could think about shorting it, but I think you already found a good shot in ACC, so we'll just wait and watch. Axis Bank, well, we said banks are the place to look at perhaps buying, so this one continues to hold its strength. So there's a tentative head and shoulder there, as you can see, but clearly to do my charts, 1 second. Alright, so at the life high, just dancing there at 500, and still looking good, I would say. It's quite possible, I think, that a lot of the banks will go sideways maybe much of the next few weeks till the next RBI policy is out, because if you remember, After the previous RBI policy, only I think in a week or two after that, we saw a big drop in the wholesale price index and the big massive correction in the crude oil prices. And unless RBI surprises us with some early cut in the rates, which I doubt at this point they're going to do, the banks are just going to have to wait and watch. And then once that is sort of the uncertainty is out and the RBI does drop rates, then it'll probably shoot up the banking space. Right? So Axis Bank would still look at looking at it and would be definitely be long on Axis Bank along with many other banks. So Bajaj Auto downtrend, uptrend line broken, downtrend getting stronger, and so there you have the auto very critically poised just at 2,500 basically, and could go down to 2,350. Looks like I would say buying the 2,500 put might be a good option, good choice. You can see the high of 2,499 on Friday, and clearly the 50-day moving average acting as resistance, the 100-day right below that, and a downtrend line which is clearly there, lower tops, lower bottoms clearly there. And again, I think the event risk is significant going forward for the next 1 month with the quarterly results. But so that's that for every call or every view we are taking now. That's one thing to remember, which is make sure you've checked the event calendar. Make sure you are not caught by surprise by an announcement of the company that you're trading or investing in. And so just take care of that risk. So overall bearish on Bajaj. Excellent stop loss, I would say at around 2,550-55, and once it breaks 2,425, then all the way to 2,350 and lower. Bank of Baroda, well, bank after bank. This one also, by the way, MACD could just hissing there, and it just might do a crossover and then go higher. So not too far. Every opportunity to come when it comes down, one should look at buying it. Once it's it tested that 1,000, came back aggressively, almost 6-7% change on the positive side. Once it came to 1,000 and back up, it's a matter of time before it goes back up. Bharti Airtel. So the big news on Bharti, or rather the big surprise from Bharti, was that they wanted to start charging if you're using their internet service for things like Skype and Tango, I think, and all of that, and big debate about net neutrality. So what will they do? Not sure. Just a proposal, or they're going to charge from 1st of Jan. Said you had something on that, right? They're going to start from 1st Jan, or it's just a proposal? Yeah, they're going to start charging. All right, so this is very interesting. Going to see have some very unhappy customers. So we'll have to see what happens. Clearly 375 is a good support, a good resistance, and before that even 350, 360, 365. And if it went back below 350 or 345, I would seriously think about shorting Bharti. Right? Okay. So again, one thing to point out here, not a very sharp fall here, but after that a sharper fall has happened. Typical of how downtrends are. In the beginning, they test your patience in terms of really not going down, and then you wait, and you start to think that there's really no downtrend, and then once the domino falls, it just falls again and again and again. Don't forget that thing about downtrend. Sometimes they test your patience, but if you have your conviction and you trade right, then suddenly the profit starts to come. Okay, so VHEL, big sideways move for 5, 6, 7 months. Like you saw, the capital goods index not healthy at all. VHEL, as a matter of fact, on Friday giving us another nice big red candle. Of course, volumes, I'm not even going to look at volumes. I expect them to be low. I think it's only price levels. So 250 goes, then most certainly 235 is coming. I think this is a pretty good probability short. Okay, so let me put that ACC multi-month head and shoulder top. Wait for breakdown of neckline, then 200 down is target. BHL looking good, short below 250. Banks, access, buy. BPCL, interesting. Green candle on Friday. Not sure when the crude oil thing announcement came, customs duty before or after. So good resistance at around 667, 668. Once it breaks below 630, then 600 is, I think, quite possible on BPCL. By the way, I read some small headline on somewhere that Reliance is giving some discounts on fuel on its vending outlets. Does anybody have any news? Is that true? No idea. There are no Reliance things inside the city as far as most of them are all on the highways. So anyhow, so BPCL here, and you can see that BPCL is also in a downtrend right now. Quite possible that it could get stronger. So we'll have to wait and watch. It'll be interesting to see how much the fuel cut happens in the next few days on the 1st of Jan. Is there going to be a New Year gift to the public with another, I don't know, 5-6 rupee cut? Given that in the last 1 month, if you remember, crude has significantly gone down, or was a 7.5% increase in customs just in time to nick a massive price cut. So we'll see what happens. What you have on BPCL to note is probably not exactly, but pretty good sort of tweezers bottom at below 626, and if 626 and or below should be the trigger for your short, or you could even short here with a nice stop loss at 665 or 671 if you want. Right. Gain, weekly, daily. All right, so again Kane went back, bounced up, 250 resistance going down, and this downtrend has just become more established. Pretty good. Yeah, so I think probably should wait for this to break at around 225, and if 225 breaks, then at least 200. So not sure how the options look there, but the 250 put, 225 put are something that you could look at holding it for the rest of the month perhaps. Cipla, well, very interesting. Head and shoulder on Cipla over 3 months and on the verge of a breakdown. Okay, so you've got another Cipla head and shoulder top just at the neckline. So you saw the pharma index was already weak. Cipla big constituents. Very interesting that it's just there, not going to move that trend line at all. Just highlighting it. Should it break 600, please short Cipla, or if you really want to be a little more aggressive, then even 613, 610 is good enough. It's at 622, another 10 rupee fall, and then should be shorted. Again, please note that you have to know when the quarterly result is out, and if that's bad, then easily you're talking about a 70 rupee 10% drop in Cipla stock from current prices. So we could be looking at something like 550 somewhere there, and then 530 is really the next support, and then 500 psychological number. So could be a big one in the coming few weeks. I think just make this. Coal India, very interesting. Big jump last week, came down. I don't know if this is any news or reforms, but clearly Coal India is not a stock to short. As a matter of fact, might actually be a stock to buy. I think last one or two IMRs mentioned about this MACD nicely trending up. It's showing definitely strength, and last week was definitely a good week on Monday. Some sort of cool off. I think great on the volumes here. Something cooking. If it comes to 370, maybe actually a place to buy, but definitely not a place to. It's not a stock to short. As a matter of fact, the uptrend seems to be getting stronger in this case. So, and then this resistance line here has clearly been broken, and on a day it's come back down. We'll wait and watch, but this could be a potential long. DLF, interesting. Big engulfing candle, bullish engulfing on Friday. Nothing in the volumes. Clearly I don't know if this is accumulation. It looks like that. Seems to be some sort of accumulation happening. This is again weekly chart, remember, and I don't know. Again, I think I mentioned this last week, but didn't hear anything, and I didn't do anything, and that was about a fundamental analysis of DLF. Could be good opportunity from a portfolio construction perspective to buy. Just speculating and saying things out aloud. The stock could go another, who knows, half of this price if more skeletons tumble out. Don't know, but it's interesting that on Friday it made a big Marubozu engulfing, and above 140 it could go to 155, 160, and then even 180. Right, but 120 is a very important support to watch out for. So DLF could be a potential buy. Dr. Reddy's alright. So remember this flag we had mentioned, I think 2 weeks back, one break and then the flag target achieved in Tuesday. Another flag seems to have formed here now. Okay, downtrend flag. And I would dare say that we have another breakdown. And this is not too much, 3-4 to, I would say, what's it, 3-2, so 200 rupees, and from here to 3,000 rupees. So 3,000, maybe 2,950 is the target for. Okay, I'm getting an error message here about audio connection. Can you all hear me clearly? Just confirm. Can you hear me? Check, check. Hello? 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 Am I here? Am I not here?